Have you thought about growing your wealth but don't know how to start? Talk to Invest by Metricon. They make property investing easy. So for all your tomorrows, build your financial future today. Invest by Metricon. Build wealth. Build today.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hi, good everyone. How you going? Welcome to the podcast. Thanks for joining us. Phil Tarrant here, host of the Smart Property Investment Show. I've been doing this thing for a few years now, and I sort of like to bundle a lot of my property podcasts on a Tuesday morning. That's what we're recording right now, about 10 a.m. And it's a highlight of my week. I get into property mode here at Momentum Media. My job, as you know me, is I'm editor of Real Estate and Consumer Wealth. And what that allows me to do is navigate wealth creation sectors of Momentum Media. And I'm very fortunate I get to speak to a lot of people across not only the professional sectors connected in with wealth creation. So there you're talking about people that work in mortgages, funds management, trading, property, everything where you can go about trying to make a few bucks. I chat with those people, and it's quite an expansive network that I have, and it's a real privilege that I get to have that reach and connectivity. Also, I speak to a lot of investors, so those who are doing the doing. It's a big focus of my role here, and Tuesdays where I immerse myself into this sort of stuff. And I've learned a few things along the way. And I wanted to really sort of set this podcast up with a discussion around maybe the things that I've learned, the experiences that I had working with people, and maybe to dispel a few myths and maybe some uncomfortable truths for some people as well about what I've seen and what works and what doesn't work, particularly for the purpose of this podcast around property investment. But it's just not going to be me having a chat on the podcast. So I had a discussion probably, it's got to be about 18 months, 2 years ago, with a gentleman by the name of Paul Glossop. He heads up Pure Property Investment. He wrote a book called The Surfer's Guide to Property Investing. We sort of broke it down. We went through a couple of chapters, and I like to think Paul has a real world view on the work that he operates within, and that is helping consumers, helping his clients create wealth through property. But he's not really in the business of selling what I think is a myth that a lot of people subscribe to, and that is, I did it myself last night for a little while, just scrolling through the Instagram. And I sort of sit there and I shake my head and just really worry about how people are goal setting based on what they see on social media. And my view, and you can agree with me or you can tell me I'm an idiot, and you can send anything in to editor@smartpropertyinvestment.com.au. The snake oil salesman of 2020s is Instagram. People are selling a dream that largely doesn't exist. They're selling a myth that most people try to aspire to, or some people aspire to, that doesn't really exist. And in the concept of property investment and why we invest in property, we do it to make a few bucks to build for a better retirement. And that's our sort of beacon here at Smart Property Investment. We do it, and we do it in the way in which, in the discussions I choose to curate and host on this show, hopefully give a direction which is realistic. And that is, you're not going to be a bazillionaire overnight. You're never going to be, largely, most property investors, lying on a beach somewhere in Cairns. And I'm not talking about Cairns in Queensland. I'm talking about the European one, drinking pina coladas and driving around in a Bentley and a Rolls Royce. It doesn't really exist. It is a myth for most. And I would temper your strategy and your goal setting around not aspiring for that particular myth. But you may disagree with me. Most Australians I know are pretty humble folk. They look after their family, and they're trying to create a better life for those people coming in the generation after them. It's where I hope our Prime Minister is setting his objective. And I think largely as a nation, we've done very well. We are the lucky country for a good reason. We are a lifestyle superpower for a good reason. Don't subscribe into the snake oil myth of a world that doesn't exist, and maybe the lifestyle that you're choosing to create, even if you obtained it, you probably didn't want it. So I'm going to have a chat to Paul Glossop about this to get his philosophy on it. We'll go into a couple of chapters of his book. We'll revisit it. I think I heard on the grapevine he's going to maybe do an update of this at a point in time. Let's get him chatting about it. He might disagree with me. He might think the myth is what I've just spelled out. Everyone's sitting around, no one's working, everyone's just relaxing, doing nothing with their day, taking photos in bikinis on beaches. Maybe that's what he aspires to. Paul, yes or no? Do you aspire to that?
Phil, you had me at bikinis on beaches, and I was just thinking about you and your smugglers down at your local little surf lifesaving club helping out with your white linen shirt on top, smugglers at the bottom, and looking forward to summertime, mate, which is in the thick of lockdown is something that is becoming a bit more of a yearning opportunity for everyone. But I agree with you. In short, I think this is the challenge that we're going to face, and we're probably going to face it for the indefinite future as far as people, and I can tell people right now that I'll be guilty of basically stalking people on the internet, not personally, but by marketing channels. The moment someone hits our website at Pure Property, we're going to have remarketing to go to them. And I dare say that there's going to be literally, at the moment, no doubt, thousands of different property companies, and a large number of them are essentially promoting, buy this property, lead your lifestyle, build it up to 10, exit out, and then have $250,000 a year passive income, and then go and essentially, as you said, upgrade to a European car and a beachside property, and then do nothing for the rest of your existence. Where, to your point, mate, is that when we talk about the vast majority, if you're talking about 10,000 investors, there's probably going to be a handful out of every 10,000 investors who truly are in a position where property, from a self-made perspective, and I'll probably highlight that, self-made from day one without any essentially leg up from anything other than their own grit, their own investments, their own time, and their own tenacity, who actually will be in a financial position to choose to do that. Not that they do that, but choose to do that. So, I think it is genuinely something that people need to get comfortable with, is that property, for the most part, is intended, property investing done right, is a supplementary income which allows you to have a better long-term position financially, and you're not necessarily going to be self-reliant on the pension into retirement.
Yeah, and I think it's incumbent on people like us, Paul, who have influence inside of, and I hate the word influencer, it's been hijacked. Influence is a great word. Influencer is a bad word, right?
I agree.
Just embrace that concept. Positive influence is a good thing. Influencers, per the definition of your social media fascinated people, don't really sell reality. And I think for me and you and those people that work inside of property who are helping shape the decision-making of people who invest in property, we have a huge responsibility to make sure the way we frame outcomes, the way we frame goal setting, the way we frame about the realities of property investment is realistic. And one of the reasons why we created this particular podcast and Smart Property Investment, and for those of you dialed into it, the Smart Property Investment portfolio, which is the portfolio that I share with my business partner, Alex Whitlock, which we built for the purpose of sharing on property investment. We tell you as it is. And I tell you what, me and Alex, well, he might be, but wearing bikinis on beaches, we don't subscribe into the snake oil sensation that is social media. And I like to think we've done a pretty good job in being part of many influences, not influencers, shaping Australians' attitude towards property. Yourself, Paul, you work with property investors. You penned your book, and it's pretty much a chapter one of it's probably more of a chapter 3 for you of your journey through property. And at a point in time, it captured your backstory about the why and how of property investing and how you went about building a portfolio, right? I've read the book. The best part of it is the foreword written by me, by the way. But
it's not the first time you've said that.
I know.
And if I had an opportunity, that would be the first thing I'd do. Is if I could rewrite the foreword,
get someone more important to write it for you. But,
absolutely, someone with influence.
but I've read the book, and there is nothing in that which I think is not attainable and achievable for other property investors if they go about doing it the right way. A lot of people might read that and just go, wow, this guy isn't very ambitious.
Yeah, no, look, I mean, mate, you're exactly right. And it's funnily you say that, is that when we talk about how property can become a vehicle to allow you to do what you want, and there's actually a distinct part that I write about in the book in Surface Guide to Property Investing in exit strategies, which is towards the back end of the book. And literally within that first chapter, the heading on that part is how much is enough, ? And I'm not the one to dictate who expects what is enough. And I'm in the privileged position where every single day I probably talk with between 5 and up to maybe 10 separate either aspiring property investors or existing property investors. And some of those have in the levels of dozens of properties in the portfolio. Others are buying 1, maybe 2 properties tops because that's all they need or all they see that is needed as part of an overall financial position. But the reality is that their aspirations as far as do they want a $50K supplementary passive income into retirement right through to $500,000. And I can unequivocally say that, look, and most certainly not all of it is achievable. That's the first thing I'm very honest with my clients, is that someone comes to me and says, hey, I'm on $80,000 a year salary. and I'm at the top end of what I can earn, and I don't intend to change jobs, and I'm really happy with what I do. I have a mortgage of $600,000. I have a home that's worth $900,000. Have a bit of equity in there. I want to buy a property, but I also want to get to the point where I want $250,000 passive income in the next 15 years. My response, and the reason why I can recite that pretty quickly, is that I actually hear it pretty regularly. And unfortunately, that person's probably heard that notion via these influences that you've said, Phil, by different methods that have happened out there in the background. And the reality is, from my end, is that I'm very quick to essentially tone that down to say, well, if that's truly what you need, and B, what you think you can achieve, we're not going to be the company to help you or assist with that. We definitely can work with you to go through the process of seeing how we can extract some equity, look at what the right asset will be for that first investment. But to get to $250,000 passive income for that particular scenario, I can almost guarantee, unless you change jobs, or unless you win the lottery, or unless your property 10x's within a 10-year period, none of which are very, very likely to happen whatsoever, then it's just not going to be attainable. And people need to be realistic in saying what is, and property, and I guess I'll bookend that whole concept with property is the ultimate delayed gratification investment. And if people aren't willing to enter into property with that mindset, then I personally don't think property is the right vehicle for people who think that that's going to be what's going to get them to their financial independence.
That's a really good point, Paul. And to summarize that, and maybe the purpose of this podcast is, maybe this is a good opportunity for you to just recalibrate your perception towards property and actually what you want the outcome to be. We're going to go to the break. Stay with us, come back. We'll get stuck into that a little bit deeper back in a moment.
In the property investment industry, there's countless stories of the one that got away. And it's always the same reason. To pay the deposit, they needed the settlement from another property to come through, and they waited. Realty Assist Australia knows that when you find the one, waiting isn't an option. That's why they have a same-day settlement fund advance service. There's no credit check, no application fees, just a single one-off fee to advance your equity. Visit realtyassist.com.au/settlements now.
Welcome back, everyone. It's Phil Tarrant, host of the Smart Property Investment Show. I'm with Paul Glossop, who heads up Pure Property Investment. And we've got away from talking about markets and a bit more of a philosophical conversation. It's okay to do that every now and then. Not everything is tactical about the how. It's sometimes about the why and what you want the end result to be. And by tuning into this podcast, I can assume that you're looking to create wealth through property. So welcome, and well done on investing in your future. But the opportunity for us, people like myself and Paul, who do have a voice in properties, to help calibrate people's perceptions towards it. So you really need to have a good, hard, long look at what you think your outcomes can be in property. And I'm not talking this down. I don't want to be an anti-hype man, whatever that is called. What's an anti-hype man called, Paul? Negatron. I don't want to do it. What do you call it? I don't want to steal people's vibe or what. I don't know. I'm trying to find a movie reference.
I believe it currently on the internet. It's called "Don't Be a Karen." Don't be a Karen.
No, I don't be a property Karen. No, it's a bit different.
Don't be a property Karen.
Property Karens are very different. But I don't want to take your mojo, right? I don't want to take your mojo and invest in property. What I want to do is just help you maybe assess it, recalibrate it, because situationally and environmentally, we're at a very important inflection point for property in Australia. And I've been doing this for a little while now. I know a lot of people have been doing a lot longer than I have. And markets move in cycles. You only need to think back 18 months ago, 20 months ago, and the Commonwealth Bank, cba.com.au, were telling us that there was going to be a 30% reduction in house
33%,
values.
Phil.
33% reduction in house values.
33%.
There you go. And all of the other economic forecasters and economists were telling us similar. Some of them were quite measured. Some of them were very erudite in their view of it. And I think of a number of them who I follow who were telling it as it is. And I think me and Paul, through this whole period of COVID, we've been saying as it is, hold the line. It's going to be okay. And here we are. Okay. The problem is,
a wild point, sorry to cut you off there, Phil, is that at that same time, pretty much when that CBA data came out, you and I did a live webcast where we basically, what I did is uncover the last 5 major downturns in the Australian economy over the last 40 years and what happened in the following 5 years from a property perspective. And essentially the average out of those following 5 years, ironically, based on that 33% that CBA, is that the average 5 years, the Australian property market grew by 33% over that following 5-year timeframe. And that's the irony of of where we are right now is that we're not there yet, but we won't be far away from 33% growth in probably 2 years' time following the start of this pandemic and then the start of what was our first recession in 30 years.
Yeah, well, they're talking about potentially going back into a recession, at least in New South Wales, and the official definition is 2 quarters of negative growth. And then you just need 1 quarter of positive growth to come out of recession, correct, Paul?
Is that right? Correct. And it probably isn't a great tool to measure. I think in the pandemic type of measurements are probably not accurate because they're usually boosted up pretty quickly by a whole bunch of artificial money.
Yeah, there is. And you only need to think back to the start of June, unemployment rate Australia-wide was 4.7%, right? It's get absorbed in the data, but, we're sort of getting above that today, and it's a bit more philosophical. Now, the point is, in this market right now, so you think back 20 months ago, every single headline was, the bubble is finally bursting. And all those people like, what's his name, Harry Dent, going, I told you so. Yep. I told you, I've been telling you for 20 years that Australian property is overcooked. Every single headline, even from reputable news sources, and I'd like to think Smart Property Investment is a reputable news source, but we didn't report this, was saying, finally the bubble has burst. Everyone's going to lose all their dough in property. It's dire. Don't touch property. You're an idiot to touch it as an asset class. Fast forward 6-9 months, and then even leapfrogging that to where we are today. For the love of money, if you wanted to buy a house or a property in Australia, good luck finding one in most markets because the property is running hot. So what does that mean? That means that every man and his dog who is a property expert is out there spruiking their wares right now. And some of them are very good operators and they can help leverage Australians into property investment. Others, I'd be pretty concerned about how they're going about and the advice and the recommendations they're offering. And you gave a really good case study there, Paul, of someone on 80 odd K a year wanting to transform their lives. They may subscribe into some of this stuff you see on social media right now about how you too can have a Lamborghini and a Ferrari in your driveway, how you too can be holidaying on a private jet in Europe, how you too can be XYZ, create this lifestyle myth that a lot of people potentially can subscribe into, which is often a myth. So how do you balance, Paul, good advice, reasonable advice, realistic advice, prudent advice in this current market when there is so much noise out there? And if you want, and it's confirmed, what do you call it, confirmed bias, if you want to go out there and if you start looking at this stuff on your social media, the algorithm's going to feed it into you in droves. Most of it's sponsored. If you look like, according to social media, you're going to subscribe into this inverted commas imaginary lifestyle that doesn't exist for most, it's going to put blinkers on you and it's going to shape poor behavior and poor decision-making moving forward. How do you navigate that, mate?
There's a few things I personally would even add to that, Phil, is that if you're a property investor and you're looking either for your first or for your 10th investment at this stage and maybe have done so for the last 18 months, is that you're not only going to be subject to people who are going to be potentially spruiking in air quotes or having all kinds of different recommendations to live a life of financial independence and go buy the Lamborghini, et cetera. But you're also going to run into, and if you're going to do it yourself, which the vast majority of people do it themselves, and I dare say that the vast majority of your listeners will be buying property themselves. So what they'll also hear is that extra cohort and that much larger cohort of people, most notably real estate agents, as well as every single other person in Australia who all of a sudden owns a property, who has an opinion on property, and essentially then says that if you buy this is what's going to happen. Here's a suburb I'd recommend. Here's the properties you should buy, etc. Where when you refer to confirmation bias, is that if I'm looking at who I'm going to be listening to, who I'm going to be mentored by, who I'm going to partner with for advice, for education, and essentially who I want to take any kind of recommendation from, the last person on a list of probably 20 or 30 people would be people who have done it once, maybe twice, or someone who has a focus on one particular area, or someone who potentially has bought one property and never bought again, but that property was bought 30 years ago. So over time, they've all of a sudden managed to achieve a very big wedge of equity. I want to listen to people who have done it many a time before, who have done it in many markets before, who also probably subscribe to a bit more of a notion to say when, and the Buffett analogy comes out closer now. And the irony is that 18 months ago, it was the opposite, where, be fearful when others are greedy scenario. So we've got to also be tempered with the FOMO scenario right now to make sure that people don't think, I didn't get in, I've got to get in, I've just got to buy whatever I can buy. and go and make it happen. Where, to be fair, the time to probably do that and be a bit more greedy was 2 years ago, was probably 3 years ago in Sydney, Melbourne, Brisbane, Perth, basically every single market. And the reality is these cycles will repeat themselves again and again and again. But you need to be measured in the sense that, going back to what I said earlier, is that a cycle doesn't make a property investor. One property with good growth doesn't make a successful property investor. Understanding that buying property, holding property, managing a cash flow, recycling equity, and building that over time and doing it multiple times with multiple people, that's what makes a successful property investor. And you've basically got to think about, how do I find that out from the person I want to take advice from, whether it's someone who's I'm going to pay for that advice, or whether it's a friend, family member, real estate agent, mortgage broker, whoever it may be. Really scratch the surface much deeper to really understand where they're coming from, what their angle is, and what their motivation is. And I hold no bars. I charge a fee for what we do, but I know that we charge a fee to get an outcome, and that outcome's not an outcome that we promise in 12 months. The outcome's what we essentially are aspiring to achieve over a 10, 15, 20-year period. And yourself, Phil, as well as your business partner, Alex, you've paid buyers agents plenty of times in the past because A, you don't have time, and B, that you're not trying to achieve an outcome in the next year. You're trying to achieve an outcome in the decade, 2 decades, and a legacy.
Yeah, and the challenge with this market also is that people are going to think they're absolute legends and gifted property investors because they've bought at the right time and they're going to see a significant uplift. They're going to go, hey, how easy is this property game? And you see it time and time again. And if you have been buying or have bought in this market, guess what's going to happen? You're probably going to make some equity out of it, but you got to make sure you don't drink your own Kool-Aid. Apologies for the American reference, but I think most people get that. But, stay on that. How do you know? You got to check yourself for you're getting egotistical. Your head's getting too big. You think you can't go wrong, because if you go down that particular approach, you're probably going to, at some point in time, cop a big one on the chin. That's going to realign your thinking. So how do you get ahead of that, Paul? How do you know if you're getting too big for your boots as a property investor? How do you know what do you do about it if you're starting to listen and be absorbed with and therefore influenced by the wrong type of influence? Is there any way you're going down that pathway?
I do. Well, there actually is some really simple ways now for a lot of probably the Gen Ys, Gen Xs, because if you're going down that pathway, the reality is that if you're a social media user, you'll probably be all of a sudden be hit on your feed by a lot of sponsored ads that actually have someone in a G5, that have someone in a Lamborghini, that have someone on a yacht, that has someone drinking champagne, that has someone doing all those lifestyle exponential things, which talk about how you can be that person too. Because unfortunately and fortunately, the way that you look at it is that if that's hitting your feed, the reality is if you clicked on something or you've stayed on a particular screen for a period of time, so it's retargeted you to show you something similar or that ad again. So if you're thinking you're susceptible, just have a quick, that's a really simple way for someone to check themselves and say, what comes up on your Instagram feed, on your Facebook feed as sponsored ads? And you might want to think, geez, hang on a second. If I'm seeing a lot of these, that's because I've, at some stage, probably more often than other things, I've looked at this stuff. And I can share with you unequivocally, the two main things that hit my feed are different cooking channels and surfing channels. So if I'm looking at stuff, I get bombarded with people showing me how to cook random foods in certain areas because that's what I do like to watch, and I do like to cook food, and also surfing. So I get spammed with so many different surf camps and things that actually I want to be at some stage of my year. So I do know that I obviously spend a lot of time on those things.
Yeah, you get self-absorbed by your algorithm. For some reason, I always get drunk people doing stupid things coming up. Which I think you told me to follow.
I may have sent you one or two funny things over time, and all of a sudden you're down that rabbit hole now.
Oh,
but
by the way, it is quite shady.
Yeah, but I do think it's a pretty simple tip for anyone who wants to think, okay, well, if I still want to follow property, and I do research property all day, every day, so do my team. So I do get hit by a lot of property aspects, but I think that is a key part, is that you can if you're not on the social channels and you essentially just absorb this podcast and maybe other things that you read, then from there you really got to think, who are your mentors, and remembering that we're that influence of those 5 people who are tightest around us, and try to understand who those people are and what influence they're bringing from their own property experiences for you, as well as obviously a myriad of other things that try to create and shape us as humans and trying to be the best people we can be. But if we're talking specifically about property, you don't have to have 5 of your closest friends who are property experts. But you may say, I've got a separate circle of people who I talk to about property. They're not the same people, but I want to grab those people. I want to talk to them regularly. And I also want to contribute to them regularly, things that you're listening to and hearing. Because, you and I, over the years, we've invested a lot ourselves personally, and we've got a lot of friends and colleagues who are in a similar circle. And we do share a lot of information about property very regularly on the airwaves, off the airwaves. And I think it's shaped us to become better at what we do, better property investors, as well as over time, we've stayed the course is a big one where we haven't wavered. We haven't thought this is the home run I've been waiting for. We've basically said, I'm going to buy this because of this reason. I'm going to buy this. I'm going to develop this. I'm going to buy this. I'm going to develop this. We're building out there. I'm going to build that granny flat, renovate that house. You're looking at doing certain things in your own portfolio, which we were only talking about off air yesterday. And they're the ongoing conversations, which just ultimately are organic, but they're the important ones because you go back and forth about questions, conversations. Is this the right answer? And the fact that you're not asking me a question per se for a yes or no answer, but we're sharing ideas and thoughts. And it wasn't about, does this make sense monetary wise, but is this the best thing for what you want to do is shaping, exactly what we're talking about, shaping your lifestyle and what's the best thing for your family. These are all the things that we discuss.
Yeah. And by and large, this is a podcast around shaping your lifestyle. It's just really shaping a lifestyle which is attainable and realistic. Because if you get on a pathway of trying to create an unattainable lifestyle, guess what's going to happen? You're going to be disappointed. And disappointment can exacerbate into a whole bunch of more complicated and serious issues. And that is the key point. I don't want to talk down investing in property because it's not what I'm about. But what I'm talking about is your goal setting need to be realistic. They need to be SMART goals. And no doubt SMART runs across what SMART goal settings is, Paul, and you can tell us about that because I can't really remember right now. Specific, measurable, attainable, realistic and time bound. Yeah. So get a blank piece of paper out and write down a capital S, capital M, capital A, capital R, capital T. And that's a really nice way to start your goal setting. And you need to be setting goals in property. You need to be giving you and yourself and those around you, whether your family you're investing with them, a realistic approach to obtaining those goals. You make a really good point, Paul. And there's that old adage around what mean or middle of the 5 people that you most connect yourself with, right? You can have different pockets of 5 people. I reckon I've got 50 different pockets of 5 people I probably operate with in different parts of my life where, I use them as a peer group, as a sounding board for a lot of the stuff that I do. They help influence my perceptions. And it goes back to my original point at the top of this podcast. I speak to a lot of people. It's a really fortunate position. I'm not getting my inspiration. I'm not getting challenged. I'm not getting influenced by social media. I cut that stuff out because it's not realistic. So that is a key thing. SMART. On the weekend, sit down with your partner, your wife, your husband, whoever they might be, get yourself a glass of wine on a Saturday afternoon in lockdown and just start doing it. And you'll have some fun with it. It'll create a lot of good discussions and be expected to be challenged by some of your ideas. But going back to the point, the snake oil of this millennium is social media influencers who sell a lifestyle and a dream that isn't attainable. So make sure you're connected with that. I could probably I didn't want this to be a rant this one around.
No, mate, but I truly think that it's so important at this stage more than ever is that, to your point, mate, is that we've been through these cycles before. And I know out of the previous Sydney growth cycle, let's say back in 2013 to 16, there was no shortage of property experts that came out of that cycle who then essentially came up with some off-the-plan opportunities, which were going to set the next version or the next generation of people rich. But the next 4 or 5 years were pretty flat on the most part, unless you were investing in Hobart and a number of other markets that may have actually been moving at separate times. But the role that you should have is that, to your point, mate, is that mindset is something that needs to not only be set up front before you start to challenge yourself and start the process, but it needs to be revisited. And I don't think it needs to be rigid to say on this particular day, in this particular year, but when you do make a important financial decision or contemplating it, the mindset, the whole gamut around mindset needs to be challenged. And it might not necessarily even be buying something. It might be taking a job or starting a business or having a child or moving into state. There's so many different things which can recalibrate what you think is important and what that means from your whole property portfolio perspective. And they're all the things that we cover with our clients before we even buy property, is trying to go through all those different aspects as far as why are we doing this? What do we need to do? What's the budget we should be hitting? What happens if you do quit your job? What happens if the business doesn't work out? What happens if you have a third child? What happens if those 3 children have to go to private school and you want them to go to private school? All these things need to be considered with what we're going to do next and what properties we buy, what cash flow we need. All these things need to be considered and then recalibrated every time one of those things changes as well.
It's okay to recalibrate, but the point is that you're responsible for the lifestyle that you want to create. Yes, lean on those people around you, use trusted professionals to help you on that journey. But at the end of the day, it stops with you. So you're in charge. You're the captain of your soul. What is it? I can't remember my...
Captain.
Anyway, let's move on from that, Paul. I think we've done that a pretty good service. Any questions at all that you might agree or disagree with me or us, editor at smartpropertyinvestment.com, do you get in touch? If you want to come on and have a chat about this stuff, if you're one of these people who subscribe to a particular view of what property investing is going to be, and then there was a point in time where you went, hang on a second, this is not really the case, this is not right, and you've recalibrated, we'd love for you to come on the show and have a chat to us about it. We're going to go to a quick break. When we come back, I've got Paul here, so I'm going to ask him about what's going on in property. Back in a moment.
The mark of financial success isn't about getting bigger, better, faster, or more. To Paul, success is freedom. Freedom to spend more time with his family, or giving back to his community, or just more time to go surfing. Paul Glossop, an award-winning property buyer and regular guest on the Smart Property Investment Podcast, has taken the lessons he's learned building a multi-million-dollar property portfolio and laid them out in his best-selling book, A Surfer's Guide to Property Investing. For a limited time, get your free copy of Paul's award-winning book and receive a roadmap for building both lifestyle and wealth through property investing. Grab your free copy today at purepropertyinvestment.com.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with Paul Glossop. A bit more philosophical discussion around recalibrating your goal setting when it comes to property. Remember, SMART goals, SMART. Have some fun, do that, and you can do that quite often. You don't need to sort of set it in your calendar, but to recalibrate at any point in time, you might have changes in your life, is a good time to do that sort of stuff. But Paul, this is the property show, so we probably should talk about property rather than me just having a bit of a rant about just the quick inside look I had on social media. It just reminded me it was such a waste of time. I probably spent 2 hours scrolling. I was trying to put my daughter to bed. She wanted me to sit there while she was falling asleep after reading a book. And I just started scrolling through Instagram. It just reminded me, it is such a waste of time. Such a waste of time.
Absolutely.
To be fair, I know you post quite a lot of stuff on social media, by the way, for your business, which is pretty good, by the way. And I'm not putting everything in that one.
Oh, mate, I'm guilty of it as well. And I agree with you that, anyway.
Yeah. Anyway, but just don't waste your time on social media. Waste your time doing other things like listening to the Smart Property Investment Show with your host, Phil Tarrant. Paul, it's a property show. What's going on in property? Quick round the grounds for me.
But I think it's going to be a very interesting 6 months. These lockdowns in Sydney and now broader New South Wales and then Melbourne and then snap lockdown for Queensland, that's now been lifted. That's gone up to Cairns. And then we've got different things as far as what's happening in Perth. Perth basically becoming a sovereign state all of a sudden. Adelaide sort of sitting between big brother and little brother and has to take influence from a whole bunch of people. And all of a sudden we've got these targets of rather than 0% community transmission, we're talking about 70, 80% vaccination rates as our goals. The reality is, and what you said earlier, is that the economy is going to be shaped quite significantly in every state differently over the next 3 to 6 months. And I think the property market's going to reflect that. So I think we're going to see a relatively uneasy position for the next few months. I mean, we only saw that auction clearance rates in Sydney last week were still way over 80%. Melbourne was close. Brisbane's still high. Around the grounds is still off the charts as far as still tracking towards all-time highs. I think longer term, what's going to end up happening out of this right now is that we're going to probably see a delay in any discussions around raising interest rates. We're going to see more money go back into the economy, which, if anything, I personally think we may see this prolong a growth cycle because we're going to see more money in the economy and cheaper rates for potentially a longer period of time. I only saw yesterday an article basically outlining that Brickworks, which is basically Australia's largest brick provider, has noted that they have to lay off staff because the construction sector in Sydney in particular has been shut down now for a wedge of time, and that might be for a longer period of time indefinitely. So we're also going to see that construction sector slow for a period of time, so less properties hitting the market. So then, therefore, there's going to be less supply. So there's going to be other things that'll have a flow on there, as well as in the rental market. So if I'm looking at it, I think Sydney's still got a bit of time left in this cycle. I personally think we've probably got 10, maybe 12, 18 months left of this cycle before we start to see that abate a little bit. And then Melbourne probably slightly behind that. But markets that we're looking at more interstate, i.e. Brisbane, Adelaide, Perth, I think those three markets in particular have a pretty good tail that's coming from this. Is that Perth only just tipped the scales now as the most affordable city in Australia as of last month. Whereas, it's a big about turn in the sense that 7 years ago, it was the most expensive capital city in Australia when you look at average household income versus mortgage commitment rates. So if I'm looking at it, there are definitely markets which have got a good 3-year cycle ahead of them, but it's also careful for those who think they're entering into markets such as Sydney that might be at very close to the top end of their growth cycle, but also obviously very expensive. The reality is that if you're holding property in Sydney, average house price is way over $1 million for anyone who's on an average household income of 150, 200 grand, which isn't exactly not much money, but we've got 3% interest rates, sub that. I want people to be cautious because rental yields are abysmal and they're not probably going to get any better for a relatively long period of time. So just be prepared to make sure that your cash flow is okay if you're buying in Sydney or buying in the Illawarra or up towards Central Coast or Newcastle or further up the north or south coast, because prices are extremely high when you look at average yields, when you look at average household commitment rates, and you take out that cheap interest rate and you've got a completely different equation. So just buyer beware in those markets, in my opinion.
Good summary. And I subscribe to a lot of what you said, Paul. I'm seeing the same thing. And I think you might tune into it. I do a live show with Tom Panos every Thursday, 1:30. That's streaming through his social media platforms, Tom Panos or REB. And his view, and I sort of subscribe to it as well. And it's also a view that's shared by John McGrath from McGrath Estate Agents, that this is going to be the biggest spring selling season in many, many years. He's indicating, Tom, they're forecasting there's going to be a lot of properties hitting market for sale, which is really going to which is a lot of delayed stuff that hasn't come onto the market. And this most current recent outbreak has probably stalled a lot of that, plus a whole bunch of pent up demand of people looking to buy. What's your view of that, mate?
Yeah, like it's funny. Very close to home for me because I'm actually looking at upgrading home at the moment. And that in itself, I know of 3 particular properties that are currently off market that I've been trying to buy, not all 3, but one of them. But in that same vein, the vendors are reluctant to show us through the property so we can get a good feel of it. And they're also now, all 3 of them, which I've been working on probably the last 2.5 months, have basically now just come to the point to say, I'm not doing anything until the lockdowns are lifted because I don't want to sell my home via a Zoom meeting. And I'm not saying that people don't want to do that. I'm not saying that Zoom meetings Zoom auctions aren't necessarily successful. However, there are people who are just saying, look, I'm going to sit tight until things are back to somewhat normal so I can sell my property. So if anything, look, stock still, for the last 18 months, stock has been super low. And it's not just Sydney or Melbourne, it's right across the country. And I think we're going to see a crazy spring selling season. I don't think it's going to necessarily take off the demand that's sitting there, because what ends up happening is you've got a lot of people who are sitting on pre-approvals now, and the data is there to prove that. So there's still a lot of people ready to go. But it's going to be interesting to see what comes of all that extra supply, and does it really slow the market? Because supply is the enemy of capital growth. So we've also got to be aware of that.
Well, so supply and demand has a lot of different factors on both sides of that, which determines or dictates how markets move. We've got to remember also, as Australia's locked up at the moment, there's no overseas migration. And, you need to overlay anything in the future. You spoke about construction being slow at the moment. That will bounce back, and it needs to bounce back. There's a whole bunch of moving parts with that. No overseas migration. The market's hot in this current environment, and a lot of it, and the people who are negative on property will tell you, is because interest rates are at all-time low and they're unrealistic or unsustainable at that rate. I was already hearing in the background the government sort of going, we need to start tinkering. This is before this current lockdown with interest rates. There was they need to have a real good look at inflation through the COVID pandemic. The government's pretty much let property run, and there's a whole bunch of reasons, macroeconomic reasons for that outside the scope of this particular podcast. And they were looking to maybe start tinkering. There's talk about APRA putting, again, the brakes on property investment, but I think that's all been stalled at least for 12 months, 18 months as a result of this lockdown. It's and it feels as though, and what we're seeing right now, it could be as bad or worse than that first spate. And there's a lot less incentives out there, and for Australian business owners, the sort of the wholesale JobKeeper type programs, moratoriums on commercial rent, so all that sort of stuff. And none of that is existing right now. The government's pretty much going, we're going to let this play out. So watch this space, Paul. I think we've done pretty good podcast there. Remember, editor at smartpropertyinvestment.com.au. Lend your ideas to this debate around what is true lifestyle design and how do you actually calibrate what that is. And the hard truth for most Australians is that you need to get a good appreciation that, enough is probably enough, and you probably need to get used to the idea that 1 or 2 investment properties is probably the way it's going to land for you. Just make sure you're buying those right ones, because guess what? Most Australians only own 1 or 2 investment properties. So that's the key, isn't it, Paul?
Absolutely, mate. Absolutely. And I think, look, it can be more, but it's going to take time. And the sooner you start, the more pragmatic you become. And then the more that you think this is a long-term play, the bigger that end prize. But that's definitely not an overnight success. And regardless of how or when cycles play out, it's very rarely going to ever be that short a period of time.
Yeah, and that book that you wrote is probably a couple of years old now. Is it out of date? You're going to do another. I know it was a bestseller for a while. You're going to do a.
To be honest with you, other than a section in the middle where I talk about the 5-year breakdowns of which capital cities grew and which ones were at the bottom end of that overall cycle for the last 40 years, the only real thing I can do from here is plug in the next 5 years. There's a few analogies about certain markets at certain points in time when I wrote the book, but they'll be updated. Beyond that, the things we've talked about, there's so many things that I wrote about in here which I know and the intention was something that's going to be evergreen that I think people can use to just form up what they want to do, how they want to do it, what makes sense for them, how to get out and ensure that they're getting the best outcome possible. So people can grab a free copy if they do want to. They just pick up the postage. If they jump onto purepropertyinvestment.com, there'll be a link on there straight away to Smart Property Investment, giving you a plug there, mate. Surfer's Guide to Property Investment. And essentially we can cover the postage and we'll give you the book for free, which is selling for about $30 on Amazon or Booktopia or any other big bookstores. But I don't know if bookstores are actually open at the moment, retail. I think they actually might be closed in Sydney in particular. Anyway, it's online. You can order it.
It's on the interweb. Go and check it out. Surfer's Guide to Property Investment. Remember to read the foreword. That's all you need to read. The rest of it is just. And
then you can start your fire with it. Rip that page out. You don't need it again.
It's a good fire starter, is it? But thanks for joining us, everyone. Whether or not you agree or subscribe to what we said, that's your opinion. But, I think it's important every now and then for us to host a podcast like this because we all want the same thing. We all want to create wealth through property. It's just really what your measurement of wealth is one of those individual things, like a fingerprint, right, is unique to you. But we'll pick up and we'll continue this conversation. Remember, editor at smartpropertyinvestment.com.au. You can go get Paul's book. I think you just got to pay for the postage, but you get the book for free, purepropertyinvestment.com. Go and check that out. It is a good book, by the way, and it's pretty easy to pick up and put down. So a free book, I'd probably do it. Smartpropertyinvestment.com.au. If you're not following us on social media, really been talking it down, so maybe I shouldn't be plugging it, but but you're not getting the snake oil on that. It's just really directing you to some pretty smart articles, which we think is good for property investors. Smart Property HQ is where you'll find us. And one thing, please, as a favor for me, I don't ask for a lot. I'm not trying to sell you anything on this podcast. The team get a real kick out of those reviews on iTunes. So if you can spend a couple of minutes just to give us a review, just what you think. And if you think we're due 5 stars, that's cool. It helps us build this community. We'll see you next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
In the property investment industry, there's countless stories of the one that got away. And it's always the same reason. To pay the deposit, they needed the settlement from another property to come through, and they waited. Realty Assist Australia knows that when you find the one, waiting isn't an option. That's why they have a same-day settlement fund advance service. There's no credit check, no application fees, just a single one-off fee to advance your equity. Visit realtyassist.com.au/settlements now.